Hi everyone, and welcome back to the program. We are joined today by the excellent Sean Fu, a financial analyst and also Chinese expert. So, welcome back to the program.
Hey, thanks, Glenn. Great to be here.
So, Trump seems to believe that the US has reached the end of the line here with the US deindustrializing, the loss of tech dominance, and of course, moving towards bankruptcy. So the problems are real. The solution may not be, and of course, the inability to compete with China is also, of course, fueling panic. So you have Liberation Day. I think there's now 30% tax tariffs on China. He's proposed a 50% tariffs on the European Union, the only part of the world he appears to have more loathing for than China, and about 25% on Japan. So I guess my question then would be, from your point of view, what do countries around the world need the dollar for, if which they have accrued over all these decades? If the US, I guess, is no longer open for business, what do you expect to happen with the dollar, as you see over the past weeks, but also what is the direction we're heading now?
I think over the past few years, we have seen the dollar steadily decline. And most of the first declines that we saw was in the reserve assets, right? We all know countries around the world, including investors, even banks as well. Whatever money they earn, their trade surplus from their exports, they recycle it back to US assets, right? Now, it was in vogue to buy a lot of US treasuries, buy a lot of US bonds. But since the year, I think it was 2017 or 2018, yes, actually declined. It's declined from around 45% of total central bank assets to now hovering between 20 to 25%. And that's a big decline. Now, going forward, after a certain point in time, countries decided that the US inflation, real inflation, was never ever going to keep up with the bond yields. As in, when you buy US paper, US treasuries, you'll always more or less be losing out to inflation. So they started to channel their reserves, their assets into US stocks. That's why we saw the big bid up in all the technology stocks, the Magnificent Seven. It wasn't just retail investors like you and me or the banks, right? It was central banks around the world, sovereign wealth funds channeling their money over there. However, right now, what Trump is doing is basically destroying the entire fabric of the global trading system. Now, if you look at how what really props up US assets, firstly is the flow of dollars. When you decide to threaten the EU with a 50% tariff, more or less you're going to say that I'm going to stop your exports from coming into my country. Maybe that crashes EU's exports by 10 to 50%, anywhere around there, but the fact still remains. The flow of dollars to Europe, to China, to the rest of the world will eventually drop. And when you have fewer dollars, arguably you need to invest in other markets, right? If you're trading with China, if Europe is trading with China, for example, China pays in euros, or Europe pays using the RMB for Chinese goods, there's virtually no need for USD assets anymore. So these countries, they'll just recycle it back to their own markets. So this is the big thing that I think Trump really doesn't understand, how he's destroying the entire fabric of the US dollar and the US assets at the same time.
It's a good point, though. All this money made in the US, it's reinvested. This is the dollar recycling by reinvesting it in the United States. But the assumption up there appears to be that the countries will just diversify their trade. But in Europe, there's some concern that with all the former Chinese goods not going to the United States anymore, that it might excessively go to to Europe and outcompete the European industry. So there's now talks of perhaps also following the United States approach, that is also putting tariffs on Chinese goods. Is this a real possibility that the tariffs might actually begin to spread, and the trade war, which initially was, US China, could also become Europe China? I'd just like to add, I don't think this is a very good idea indeed. If the US becoming a more unreliable trading partner, shutting down for business, surely, yeah, I think diversifying the economic partnerships by reaching out to China would be a good idea. But it appears that some of the yeah, some of this goes against yeah, what logic would dictate.
Right. I think Europe is, as you said, really trapped. They're trapped in a prison being squeezed by both the US and squeezed by both China, right? US, we know the tariffs are very punitive, and Chinese exports are not a joke as well. Now, the problem with Europe is that going forward, trying to sell to the US is going to be a big problem. And trying to sell to China is going to be a big problem as well. So Europe will have to find a way to climb the value chain steadily using cheap Chinese imports or Chinese exports to fuel the industries. Now, there are many markets out there beyond just China and the US, believe it or not, right? Southeast Asia is a very big market out there. The Middle East themselves is a very big market. And going forward, Central Asia, well, I guess for the EU, we can forget about Russia, right? But the rest of the world is actually a big market for them to sell to. No, the only bright light I can see for Europe right now is their debt situation is not as crazy as other developed countries, such as the US as well as Japan, right? US debt to GDP is around almost coming to 100%. Japan is around 250%. Now, the challenge with Europe is how are they going to spend their money effectively and efficiently? Now, we know Merz in Germany, he wants to release all the debt breaks. He wants to spend, spend, spend. And they're trying to go into some sort of weird military Keynesianism, right? They're trying to build up their military industrial complex and to boost GDP growth and to channel the money there. Now, I think that's not really an optimum way of doing things. But if they really want to build up their own economy, I think they have to extend a kind of weird austerity situation where they need to spend more. Sorry, not austerity as in fiscal expansion situation where they need to spend more, but they need to spend it in the right way. Now, one example is getting cheap Chinese solar panels instead of buying expensive LNG from the Americans, right? Now, Europe always claims themselves to be the champion of going green, that we want to make sure all our energy is carbon free or to that nature. But we have seen over the past 3 to 4 years weird things happening in Germany as well. They've cut away all their nuclear power. I don't believe even one reactor is fired up today. At the same time, they just refuse to import cheap solar panels from China tariff free. So I think Europe really needs to get their act in order. But in order to do that, they will have to break away a bit more from the Americans. And the only solution is to pile on more debt and hope that you can use it effectively.
Yeah, I think the problem is economic irrationality. It derives from the politics because you know they're told you shouldn't buy cheap reliable energy from Russia. Also, excessive dependence on China is also a problem. The idea is that yeah, we're gonna have a conflict in the future, so let's cut our dependence now. Meanwhile, there's a seen as being a political advantage to make Europe more dependent on the United States. As the Americans say, if you want us to be your friend, you have to buy our energy. And
Right.
so we end up buying the worst, the most expensive. Uh, but uh, but it's interesting point you made on the military Keynesianism because yeah, that is the appears to be the economic model in Europe now. That is, let's try to reindustrialize by building weaponry. But this is also in the United States now. We see, I guess, hard to avoid this big, beautiful bill and the Golden Dome. This is
Right.
a lot of money. Again, it offers jobs to to build all of this, but it's is it the right kind of jobs, and how much debt is this going to add to the United States?
Yes. All right. So the big beautiful bill, in a sense, is a great ploy to kick the can down the road again. Now, the big beautiful bill, if you actually analyze what is going on inside, it actually helps save Americans, at least according to Trump, $5,000 to $6,000 a year, right? And then with other estimates that the tariffs are going to raise US living standards by $6,000 to $7,000 a year as well. So you can see these two things, if it works on paper, it nets off each other. But what it actually does is to give Trump a big financial gamble. He's trying to gamble that industries will come back to the US, and he's trying to delay the pain to the consumers for as long as possible. But he's adding $3.5 trillion to the national debt. Now, we can all sit here and speculate whether it's going to work, whether it's not going to work. But one thing about financial markets is that they're very efficient. And what we have seen over the last 2 to 3 weeks is the bond market totally repudiating what Trump is trying to propose. Now, if you really come up with a bill that's efficient, that's going to really help the US economy grow, investors out there, they'll be very bullish on the US economy, US financial markets. They'll be piling to stocks, but we have seen them literally gone nowhere. At the same time, bond yields are going, which means bond values are crashing. People are simply not buying the bonds anymore. And in certain cases, certain countries, certain investors, they are dumping it at the same time. So the outlook for the US is that investors, everyone out there, they're just not really confident that the US can pull this off. There's just too many questions left unanswered. Firstly, where are you going to get cheap inputs from your global supply chains, right? The situation in Russia and US it's in limbo. One day they're making progress, the next day they're taking 2 steps backwards. No one knows when it's going to end. Like if someone tells me the Russia-Ukraine war could last until 2026, 2027, I couldn't say they're lying. It might definitely extend to that. And if we look at how the US has tariffed the world, 10 to 30% of their supply from the rest of the world, including China, is going to get more expensive. So this bill, I would say, is a bridge to nowhere. It really accomplishes nothing except to give Trump a very nice 2 to 3 to 4 years worth of excuses to say that, yes, we're going to change the entire US economy, but the fundamentals, the bedrock of it is still quite rotten underneath.
Yeah, well, where does China go then? Because well, and I know that there's many other markets
Right.
around the world. You mentioned the ASEAN countries, but nonetheless, it's still a huge shift which is required away from Western countries. That is, the United States is seemingly not open for business as it was in the past.
Right.
While Europe is more in economic decline, if not at least stagnation. There's a lot of political instability. Europe is at war, and it seems more unreliable, often from Beijing. So, what are the priorities for China at the moment? Which markets does it, I guess, trust the most or seek to develop?
Okay, sure. So there are two trusts that China will have to do, and I believe they're beginning to do it right now. The first way to do it is to climb the value chain like never before, because right now a lot of countries they are buying Chinese goods and they're buying it because it's cheaper. But sooner or later, all the emerging market economies like Vietnam they slowly climb it as well. So Chinese goods will get less competitive, and there's always a chance, as you alluded to earlier on, Europe and other countries around the world might actually slap a tariff on China as well. Maybe it's 5%, maybe it's 10%. So China themselves, they have to climb the value chain, especially in technology. And the US is actually helping them do it at the same time. This is where we need to do a bit of a segue to the semiconductors, right? I think the US has made two critical errors when it comes to the chip war. Now, the first good thing that I need to commend the US on was the Middle East deal, letting all Saudi Arabia, UAE have so-called unrestricted access to the chips. That's great. That's good for US, right? It allows those countries to build their technology on American Nvidia's platform. But what did they do immediately after that? First, they banned foreign students from entering Harvard. So now there's a brain drain, right? A lot of aspiring Chinese students around the world, they'll be heading to universities in China, Singapore, Southeast Asia, and they won't really be going back to the US, right? There's no opportunity for them to do as well. And secondly, the US basically told the world that if you dare to buy Huawei chips, there's always the possibility of you getting sanctioned or punished, right? Whether that's secondary tariffs or getting locked out from the dollar system, we have no idea right now. So all these are really tailwinds for China to ride on to build up their entire semiconductor base. And as long as they keep climbing up the value chain, I don't think there'll be much of a problem for them to export to the rest of the world, right? So even if other countries slap on tariffs to China, I think they still have a very strong runway of the next 5 to 15 years to really figure out this semiconductor game. And the second pertinent issue China needs to solve right now, and it's not going to be easy, it's boosting the domestic consumption. I think in our previous conversation, we mentioned how the Chinese people has been living under their means for the last 5, 15, 20 years, in fact. And trying to reverse this entire psychology is not going to be very easy. At the same time, you have China suffering a genuine property collapse. So that is also really doing a number on people's head. Their spending psychology is quite broken. So we have seen over the last few months, over the last few years, China is beginning to progressively ramp up their stimulus. And this is going to take some time. But if you're wondering about China's biggest uh, challenge right now is boosting their own domestic consumption, I think they have more or less figured out the global export game.
Yeah, I think that's the model of yeah, lower wages, low consumption. I think it was good for the decades of export-driven growth. So, of course, all the factories in the world shift to China. China can accrue a lot of foreign reserves, but now that China is rising to the leading economy, this 1.4 billion population needs, yeah, should also drive some of the consumption. Uh, I want to also ask about the yeah, since you brought in on the chip wars or yeah, the wider tech wars. Uh, to what extent can the United States actually live without China? Because we see that China can develop some self-sufficiency, which is, by the way, a very key theme in throughout Chinese history. Um, but uh, uh, but we see China. I think about half of the world's AI developers, they're all in China. They have immense financing, not just private but government subsidized. They have cheap energy. They have all the skills. And can the Americans afford to give up on this market, or has their market share already collapsed? You see.
Yeah, I think Nvidia's market share in China in just 5 years before the Biden administration was around 90 or 95%. Now he has dropped to below 50%. And if this entire situation persists, we can expect it to drop down to 5% within the next 10 years. So to your question, if the US can exist without China, the US tech ecosystem can exist without China, well, I would say if they really want to live in a bubble, yes, they can do it for the next 10 or even the next 20 years. They can possibly do it if they manage to get the entire Middle East, the entire Western Hemisphere, the entire group of G7, the Western Club, to exclusively buy US chips. They will be able to survive for time. But the issue is that they've made so many wrong mistakes that China will be able to close the gap within just a couple of years. Now, China's cost of production, research, labor, universities, it's all much cheaper than the US. So let's say the US spends $1 to get 50 cents worth of results, right? A lot of money, as we all know, is lost to the bureaucracy, it's lost to this, it's lost to that. But if China actually spends $1 to get $2 worth of output, they're effectively outcompeting the US 4 times to one. So eventually the gap will be closed. Now, the US is trying to play a very self defeating game. They're telling the world that, all right, you will not be able to buy Huawei chips. But sooner or later, the world will be saying that why are we buying American chips for 4 to 5 times the price when China comes out with something maybe less efficient, 20%, 30% less efficient, but the price tag is 4 times less. And that is going to be a no brainer for them to switch, right? Even though there's going to be a lag time, countries will eventually do it, especially when everyone is just feeling the pinch from inflation. So, to your point, will the US be able to survive without China? Well, I guess they can, but they'll be living in a world of perpetually high inflation and a world of stagnating growth.
Well, the whole you said the United States could convince some of its partners to cut off China. I think at least yeah, the Europeans could be to some extent convinced due to the huge security dependence, which is of greater importance now. But But this idea of retreating to this wider geoeconomic blocks who wouldn't trade with China going against economic interests, but due to political loyalties. Uh, this could have been a strategy though, if the United States just said, this the main focus we have now is sinking China, so we'll try to get the loyalties of all our allies and stop trading with the Chinese. Everyone takes a bit of a hit, but we kind of preserve the US-led order, which their security dependence rely on. Now, this could have worked, but that's not what the Americans did. Liberation Day, as they call it,
Right.
also went after not just adversaries but also allies. It's the problem for the Americans is not simply that they can't compete with China. It's also the wider world that they they run into this very unsustainable economic model, which is why they kept insisting. Yes, of course, it's great if America write the trade rules, but we can't afford to have NAFTA. We can't afford to have the Trans-Pacific partnerships because it's our allies as well, which drains the productive capacity and competitiveness from the US. This is the argument. So you see also this, as we see tariffs being hit very heavily on allied states as well. So how can you build this geoeconomic anti-Chinese bloc if you can't get your allies on board? I mean, if you're in Taiwan and Japan now,
Right.
what do you do? I mean, that would be not a rhetorical question. Well, what do they actually do? Because their main trading partner is not a very reliable partner at the moment.
I think trying to build an anti-China bloc, or what Besson calls Fortress America, at this point is going to be near impossible. There's just so many dependencies around China. And in order to fight against China, at the end of the day, Washington is not bothered about friend shoring. This is something I said 2 to 3 years ago when Janet Yellen came out with that ridiculous term, friend shoring. But US is more interested about reshoring. So if the rest of the American allies decide to go down that route of containing China, eventually a lot of their productive capacity, their production will be moved to the US. Now, that's absolutely great for the US, right? I mean, make no mistake about it. If all the productive capacity industries of Europe, the rest of the world, maybe even the Middle East, heads all the way to the US, now suddenly US becomes a nexus of manufacturing, but then leaves the rest of the world in a very vulnerable state. Now, if we look at over the past 4 to 8 years, especially since the Russia-Ukraine war, the US has been using economic policy as a form of statecraft. They are using a lot of their economic levers to force geopolitical outcomes. So we can always see a situation in the future where the US, if they're the manufacturing hub in the world, they can do export controls to other countries, to their allies, if they're not behaving for any issue down the road, 10 to 20 years down the road. It could be as simple as, let's say, the US manages somehow to dominate the entire car production manufacturing in the Western Hemisphere. They can always go to Europe one day. All right, you don't want to listen to us. We're going to increase the prices of cars to you. And if Europe doesn't have their own auto industry, or if they tariff China to the high heavens, 1,000%, now they're stuck listening to the Americans. All right. So if we don't follow the US in XYZ policy, now we need to buy Ford cars at a 30% premium compared to US consumers. So now they're stuck. So I think we'll be forever in this weird limbo where Europe and the rest of the allies, they'll be swung around, like in a big whirlwind, a big windstorm towards the US, back to China, back to the US, and back to the China, until they can really build up their own economy and become self-sufficiency. Uh, as it stands right now, they're just being buffeted left and right.
Yeah, I think that's what's also tearing apart the Europe in general because it is not one entity. It's very many countries with very different interests, and again, even within each country, there's no strategic focus anymore. As you said, do you diversify to hedge against the decline and I guess increasing disinterest from the United States, or do you try to buy more from America and cut yourself off from the rest of the world to show your loyalty and hope to win the backing and interest of America. So at the moment, everyone is just going in different directions. No one's developing any strategic autonomy or technological sovereignty. So it's I yeah, I think this is not something that's going to improve. I think it's just going to get much worse. And it's also the whole idea that Europeans can reach this internal cohesion and consensus based on using Russia as a common enemy to unite everyone. It's yeah, quite maddening. Uh, but on the topic of friendshoring, I guess often a key criticism is that once you diversify, or well, once you shift your trade to what you call friendly countries, so for example, India, there's this argument that then yes, the India then would end up because they have to, get a lot of these components. Not everything is domestic. That would actually increase India's economic cooperation with China. So
Yeah.
you could have this. I guess. Well, depends if you call it unfortunate. But from the U.S. perspective, it would be unfortunate. And more specifically, focusing on one country, Japan. Again, this is a country with its historical tensions and conflicts with China. But do you see any real possibilities of now Japan and China actually being able to, yeah, mend some of their, well, improve some of their ties at least and overcome some of these challenges because they both have very strong economic incentives to work closer together and put some history and politics aside? Uh,
Right.
or or are you less optimistic about this?
Well, I think I'm rather optimistic about it. For China, working with Japan definitely has more geopolitical advantages than economic ones. But for Japan, working with China is definitely more or less an economic emergency at this point. Now, if we look at the state of Japanese economy, it's really quite horrible right now. The inflation over the past 2 to 3 months has just flew to the moon. It's even higher than the rest of the G7. And we know that Japan right now has a very big borrowing and debt emergency, right? Bond yields, their borrowing cost has just flew to the moon. So in that case, Japan needs to find a way, perhaps to work with China to come to a certain agreement that will be able to produce stuff maybe designed in Japan and produced in China. This a formula like that allows Japan to really break away from the US and export to the rest of the world and grow their own economy as well. Because right now we look at the way Japan is being treated by the Americans is also quite unfortunate, right? We can hit back all the way to the Nippon Steel deal from the Biden administration where it was blocked. Trump blocked it again. Now he's going to sanction it, but we have no idea about the details really come to light. And Japan's auto industry is too exposed to the Americans as well. If I'm not wrong, 20 or 30% of the entire companies like Toyota, Honda's, their exports goes to the US. And we know in no uncertain terms that Trump wants to bring back auto manufacturing to the US. If he can, he wants every single car bought by Americans to be built in an American factory. So Japan's quite screwed in that respect. So I think Japan really needs to find a way to talk with China. And there are many ways to do it, right? Because right now, China is still lagging behind when it comes to the semiconductor games. Now, recently, China went to the Dutch chip maker ASML to ask for them to drop the sanctions to, sell us your most high-tech lithography machines, ignore the Americans, and let's do more business. Well, Japan also has Tokyo Electron, right? It's not on the same level as SML, but then it's able to actually help the Chinese reach the next level of their chip manufacturing. So I think a sort of grand technology bargain can be struck there. But at the end of the day, it's up to the Japanese. It's up to how they perceive their relationship with the Americans to be. But I think as every passing week goes, it's just getting worse and worse.
Well, often the political perspective is if a hegemon would, I guess, decline or abandon its hegemonic position, it wouldn't require this alliance systems anymore, which it relies on perpetuating conflicts between neighboring states. So I don't know. tend to be somewhat hopeful that something positive can come out of this horrible economic disaster we're sailing into. Um, Anyways, Sean Fu, you have an excellent YouTube page. I definitely go to it every day to get some good analysis on China and US and global economy. Which can reach that Sean Fu, or your Twitter
Yep.
handle is no, sorry, YouTube handle, I guess it's called, is at Sean Fu Gold. Is there
Yep.
anywhere else people can find you?
No, you can just mainly find me right now in my YouTube page. Just youtube.com/SeanFuGold, Sean for Gold, and you'll be able to hear me talk about mainly economics, the bond market, stocks, gold, and how the entire macro geopolitical picture fits into the entire story.
Yeah, actually, I would like to get you back one day and talk about gold because that's
Sure.
a shared interest, I think. So thanks again for your time.
Awesome. Great to be here. Thanks, Glenn.
Thanks.